Is the stock market going to crash? What's going to happen to gold, silver, and what's one investment that is even better? We're going to be talking about that with my good friend today, Steve Penny. He's the creator of Silver Chartist. It is the best free newsletter that's out there for commodities, gold, silver, mining stocks, trading. It's an over-the-shoulder newsletter where Steve actually breaks down everything he's doing. It's incredibly valuable, and I always get amazing comments from subscribers letting me know of awesome things and great success that they create from following Steve's simple process in Silver Chartist. There's a free newsletter. It's the best free newsletter out there. It's right there down below, linked in the comments and in the description, right there down below where you could sign up to the Silver Chartist free newsletter. Like I said, if you're looking to participate in the biggest wealth transfer in human history, which is happening right now as governments devalue currency and buy up all the assets, you need to know what to do and what not to do. And that's what the Silver Chartist newsletter is all about. There's no excuse because it's free. So it's right there down below in the description and pinned to the comments. Make sure you hit the like button, subscribe, bell notifications, send this out into the YouTube universe. Give us your 2022 predictions for the stock market. Are we going up? Are we going down? What's going to happen to inflation? We're going to be talking about that here today. Last but not least, give a shout out to our sponsor, which is Vizsla Silver, one of my favorite silver and gold mining stocks by far. One company that's performed exceptionally well over the last year where many mining companies have not. That's Vizsla Silver, one of my favorite silver and gold mining stocks. So thanks for being our sponsor, Vizsla Silver. And it's good to see you, Steve.
You bet. You bet. Thanks, Jake. Thanks for inviting me back. And thanks for the kind words.
Absolutely. So everyone knows where to get Silver Chartist, linked in the description and pinned to the comments right there down below. And the first thing that I want to get into is, did you ever imagine that things would be so incredibly screwed up?
Actually, I did. Going back to 2008, that's kind of when my eyes were open to a lot of the craziness that goes on in the world and just how deceptive, central planners and people at the top are. So I've been expecting this for a while, but you know what? With that also comes, you have to guard against complacency. Like, is it actually happening now? Because we've been expecting this for so long. And, I believe that the time has come where a lot of, these poor policies that have been going on for over a decade now, or even longer, really, are coming to a head. And I think 2022 is going to be a wild year for sure.
You said an interesting word there. You said deception. And deception is a good word. So what are the magic spells that they are using to bind us into this enslavement system with this deception that you speak of that lulls many, as you said, into complacency?
Yeah, and I'm very intentional with that word deception because, some people debate, is the Fed stupid or are they doing this intentionally? And I certainly don't think they're stupid. I think it's very intentional what they're doing. And there's so, we're being deceived in what we're told, but by almost everything on the mainstream media, from my perspective, is outright just flat out not true. But one of the things we focus on is currency and finance, because if you can get ahead financially, that kind of opens up other options for you to kind of exit the system. And deception is it centers around the monetary system. If people could understand, we're taught in school, that money is borrowed into existence by a private entity, otherwise known as the Federal Reserve, which is no more federal than Federal Express. And then it's that debt is owed back by the populace at interest. There would be a revolt in the street tomorrow, but people don't know this. And, it's unfortunate, but people are starting to wake up. So that's encouraging.
So what are the consequences of this? You just spoke some powerful words. Now, what are the consequences of this game of deception that is being cast upon us in what seems to be an intentional way?
Sure. When it comes to the monetary system, it's the wealth gap. The wealth gap right now is the widest it's been in decades. And there's a quote out there, I can't remember it correctly, but the biggest reason for civil unrest going back millennia is when there's a wealth gap between the rich and the poor. And Fed monetary policy is the direct cause of what's happening right now as far as the wealth effect. And people don't understand it. So they blame each other. We've got class warfare going on instead of going to the source. And, when the Fed creates currency out of thin air, it benefits the wealthiest people at the top. And inflation benefits the people at the top. So if you're the first to receive that currency, you can spend it, you can invest it on things that are going to benefit from inflation. Where if you're spending 99% of your disposable income on groceries and necessities of life, just a little bit of rise of inflation crushes you and it doesn't benefit you at all.
So let's expound upon that a little more. You say that the monetary policies, all of this infinite money that they've been creating, and then also giving it away to people, so we feel like maybe we're getting some of the social benefits of this money printing. And sometimes they promise attractive social programs that seem like, man, world might be a lot better if we had those things. And they're borrowing that money from a private corporation called the Federal Reserve, which you say is no more federal than Federal Express or the federal Silver Chartist. Now, let's talk a little bit more about why that is that it creates this wealth gap, because I would summarize probably one of the core problems we're facing today on that wealth gap, not in a social justice warrior type of messaging, in the simple fact that it is apparent that social unrest picks up in scenarios like that. Not only do you, of course, have higher crime, and you have less people working, and thus you have more mental and emotional and issues, addictions, domestic abuse, all of these things rise, of course. But you also, when you have a media that is on both sides, just the same side of the same coin, that is all bought out by these same special interests, then you have a spin on everything. And if you aren't paying close attention to the root causes, the spins become easy to believe. So the result of that is that it causes a divide and conquer scenario and situation where it's all of us against each other, instead of understanding it's the system itself and the puppets of that system that don't adhere to any country, they don't adhere to any race, that they adhere to non-fundamentally human values that most of us would ordinarily relate to. And the big issue is that more people, I think, need to understand this. And I want to dive a little bit deeper into that in what's causing it, what we do about it, and how these monetary policies are creating these issues.
Yeah, so what a great way to paraphrase all of that. I think one thing we can do is, it happens between our ears, and that's removing ourselves from, I call it the false left-right paradigm. Just remove yourself from that. I'm not pitted against my fellow citizens. I mean, if I'm going to be angry at anything, it's the people who put these policies in place. But even directing anger at them, I don't think we have no ability really to change it. So if you can understand the system, use it to your benefit, and that way you can put yourself in a position to not only survive but prosper in this environment and be a blessing to other people as well.
Yeah, but explain to me how else all of this screwed up stuff is caused by this global coordinated monetary policy.
Okay, let's just break down quantitative easing for a minute. When the Fed monetizes debt, so that puts liquidity into the system, and the first people to get that, or the first institutions, are Wall Street banks, like J.P. Morgan, banks like that. Well, the effects of inflation, if they print $3 trillion tomorrow, just instantly, and give it right to J.P. Morgan, well, that's not going to cause prices to rise immediately. It's the people who get it. So they're going to, the prices will rise as that money trickles through the system, or that currency. So that they benefit first. And then secondly, people who have disposable income, who have wealth already, can invest in things that are going to benefit, to include stock market. I mean, the stock market's been a prime beneficiary of all this currency creation. Your average person doesn't, they have very little money left over at the end of the month, even if they wanted to position to benefit from this. They can't, they don't have the currency. So I guess that's it in a nutshell.
And I believe this is called, isn't it called the Cantillon effect? And I hear Max Kaiser, he talks about it, where basically the way that the puppets on both sides really
Mm.
ultimately don't fight for our interest is quite simply because they're closest to the money printers. So they
Yep.
get a direct benefit from it. So the money printing gets borrowed, which enslaves all of us. Then they give it to the top 0.5% and the various entities that they have interest in. Um, so I believe Max Kaiser calls that the Cantillon effect, but it's basically that in a fiat money system, the only people that truly benefit from the fiat money system are the people that are closest in power of that system.
Yes. Yep. I'm not sure if I've heard of Cantillon effect. I can't recall if that's exactly it, but it sounds accurate to me. But yeah, you're right. And it's not only those people who can benefit from it. Understanding how it works, you can use this to your advantage if you've got a little bit of disposable income, and you can position your investments accordingly. And I gave the example of quantitative easing, but sometimes like direct bailouts, that first $1,200 stimulus check that most people got in 2020. Well, if you ran the numbers, I can't remember exactly, but I think that cost the average person, like the average taxpayer, if you divide up the bill divided by the total number of adults in the United States, it cost you like $50,000, and you get 1,200. And most people say, "Oh, thank you." Well, now you're in debt $50,000 more that your tax dollars are going to have to go to pay. Well, that raises the question: where did the other $50,000 go to? It went to corporations. It went to special interests, just handed directly to them. And we're conditioned to say, "Oh, wow, thank you for the $1,200," when it's not a benefit for you in the long run.
Yeah, look, I love as much free money as I humanly can, but it the reality is that when we promise money we don't have, we are devaluing the currency, which causes the middle class and the poor people to never be able to get ahead because any money you save is devalued at such a rapid rate. And most people that are middle class types of people, um, they are trading their time directly for money. And if you're trading your time directly for money in a massive inflationary scenario where every quarter you're seeing that type of inflation, you're actually getting a pay cut every month in a significant way. So you can't get ahead, which is why we made this channel and everything we do here is because we're all in the same boat, you know. Unless you're 20 million plus, I think, you're probably in the same boat because with the inflationary trends that are happening, even $1 million is nowhere near what it used to be. So one of the reasons I have Steve on and why I hype up Silver Chartist at the beginning, sometimes the dismay of people that say I sound like an infomercial person when I talk about stuff, is because we all need solutions to these problems and we need to participate in this wealth transfer. We're not going to be able to stop it. It's like going outside and yelling at the weather to stop being rainy. Just the reality is this is what's happening, but there are ways for us to get ahead financially. If you haven't yet, Silver Chartist is free newsletter that shows you how to do that. It's in the description and pinned to the comments down below. And one of the things that you've been focusing on in Silver Chartist recently, Steve, is some of those types of solutions. Now, let's get into a couple of those trends that you see playing out for 2022, and we'll dive a little bit more into that.
Absolutely. So if you look at a chart comparing commodities versus general equities going back decades, what you're going to find is that commodities have not been so cheap relative to paper assets in almost 100 years, around 100 years. So commodities are dirt cheap. And in this kind of inflationary environment, commodities tend to prosper and thrive. And I'm looking for that trend to reverse. I think it already has started to, but I think there's a lot of runway ahead for commodities to outperform just traditional stocks, general equities. So that begs the question: if commodities are cheap and we have a long runway ahead, well, what are the best commodities to invest in? Because I don't want to just invest in all of them. And to me, silver, uranium, gold, copper, and platinum offer the most favorable risk reward setup over the next 1 to 5 years. And notice I mentioned in there platinum. Not many people talk about platinum. Some do, but platinum is ridiculously undervalued. If you compare platinum to even other metals like silver and gold, it's just wildly undervalued. And there's some reasons for that, but I think platinum, is really exciting over the next few years. I'll put it that way.
All right. So I know you dive more into that, and that's why everyone, if you sign up right now, Steve's really doing a full breakdown of the platinum market, mining stocks in platinum, and really explaining the macro thesis. So you could check that out at Silver Chartist, but at least give us a summary, because that's a um, an unexpected one. You
Yeah.
know, you don't really platinum, like I really don't even know that much about platinum and
Mhm.
what it's used for or anything like that. All I know is there's only a couple platinum stocks. So explain it to me a little bit.
Yeah, and to be clear too, I view platinum as very speculative. So, it makes up a relatively small percentage of my overall portfolio. I think silver, gold, copper, uranium, those, those make up the lion's share. However, platinum, it reminds me a lot of uranium back, a handful of years ago when everyone hated uranium. The world was swearing off nuclear. So it's similar. It's not exactly the same, but in 2015, your listeners may remember the Dieselgate scandal, where you know these catalytic converters they had problems with their emissions. So the world's like, hey, we're going to go away from diesel, and that took a hit to platinum's demand because it's used in catalytic converters, mostly in diesel engines. Well, I think that negative fundamental factor has been more than priced in now, because platinum right now it's trading at like half the price of gold almost. Traditionally, it's more expensive than gold. Same with palladium; it's cheaper than palladium. This is a rare anomaly, and all of the future catalysts are being completely discounted, in my opinion. One of the big catalysts is hydrogen energy or hydrogen fuel cells in vehicles. Big corporations are putting a lot of money into hydrogen technology, as are governments, and it doesn't get much press yet. Well, that technology requires a tremendous amount of platinum. So I think that's being discounted. And then also, since platinum is so cheap relative to palladium, palladium is also used in catalytic converters in internal combustion engines. And a lot of these vehicle makers are starting to switch and say, you know what, we're going to substitute platinum for palladium because it's cheaper. And we see early signs that that's happening right now. And I think that's a trend that's going to continue for a long time as well. And then one final thing, not to give too long of an answer, but the platinum market is small. It is tiny. It's rough. Platinum is roughly 30 times more rare than gold. So if just a small percentage of the investing public says, hey, you know what, I want a couple ounces of platinum, well, that can dramatically alter the supply demand fundamentals in short order. So those are just some of the reasons why I'm really excited about platinum.
All right. So we got platinum there. You mentioned silver, uranium, copper, gold, and platinum. Now, these are all, essentially commodities, minerals,
Mhm.
generally doing well in periods of fears of inflation. Now, what is your expectations here into 2022? It is December 21st, 2021. We got a lot of twos and ones there for us.
Yeah.
December 21st, 12, 21, 21, and we're heading into 2022. We've had a pretty historic move in inflation where even if you're you know, what would you say? Even if you're not the sharpest tool in the shed, even if you're a dingleberry, you could figure out by now that inflation is here. Now, one of the recent interesting storylines is that Manchin, the Democratic guy, says he's not going to vote for it, and for Build Back Better, which was going to be this huge pump of money. And so, how does that affect inflation moving forward? Let's start there with 2022. What's your expectations for inflation? Do you think it levels off? Do you think it continues this pretty substantial move up every month, every quarter? What do you think?
Yeah, everything ebbs and flows. So I can see the pace of change, or the rate of that inflation is accelerating, slow down. But that's not deflationary. They call that disinflation, where inflation continues to increase. It just the pace decreases. And I think that may happen for a period of time. But at some point, the inflation we're seeing now, I think, is going to look like nothing compared to what's coming. Because from a very big picture, zoom out past this build back better, the federal government has no choice, or the Federal Reserve, I should say, has no choice but to monetize massive amounts of federal debt. I think it was in 2020, or was it 2021, where the Fed monetized 55% of all the Treasury issuance. So if they step back and say, you know what, we're not going to buy this, who's going to buy it? who's gonna fund our government? Who's gonna lend money to the United States, which is technically insolvent on a mark-to-market basis? And to incentivize anyone to lend to the government, interest rates would have to rise substantially, and that alone would crush the economy. So they have no choice but to continue to monetize debt, because who else is going to lend it to them? Despite any short-term deflationary impulse that may happen over the next couple months due to like a stock market sell-off or something like that.
How does this affect silver, uranium, copper, gold, and platinum?
Yep. To get right to your answer there, expect volatility, expect sharp, gut-wrenching pullbacks in all of the commodities, especially the ones I mentioned. But you can use volatility to your advantage if you have a strategy. A lot of people don't have a strategy to handle volatility. That's the problem. They go all in and they have no strategy at all. So you can use that to your advantage. There's going to be sharp pullbacks in all of these sectors, gut-wrenching, going to make you question the thesis. So use that to your advantage.
Give us a couple of those tools in the tool belt, as Jerome Powell would say.
Sure. So what I personally do, there's three strategies that I think of, three main ones. You can dollar cost average, you can scale in on weakness, or you can buy breakouts and trend reversals. I do all three. Like with physical metals, I just dollar cost average every month. With my trading account, I have a separate trading account where I buy technical reversals. And then for the longer term account, I scale in on weakness, on pullbacks to key support levels. So here's a strategy for me. I like to trade, but I don't want to trade everything, because I think a simple buy and hold strategy will outperform over the next 1 to 5 years. However, I take 10% of my overall portfolio, put it in a separate account, and that account is marked for trading. And whenever I trade, I use a stop loss. So that way, if the market moves against me, my stops are triggered, and now I have 10% of my portfolio in cash to scoop up bargains. So that's a strategy that I personally use.
And you break all of that down in Silver Chartist?
Yeah, absolutely. The premium service is very low ticket, and that's where I show people exactly what I'm doing and in my own portfolio. I give screenshots of my actual brokerage account, and whenever I buy or sell, I send out an alert. Absolutely.
So Silver Chartist free newsletter is right there down below in the description and pinned to the comments. You can check that out. Make sure you hit the like button on this video to send it out in the YouTube universe so more people see it. Subscribe and bell notification. We want to thank our sponsor, Vizsla Silver, and we want to thank our guest today, Mr. Steve Penny, the creator of the Silver Chartist newsletter. You can get the free version of it linked in the comments and pinned in the description. Steve, give us one wild prediction for 2022.
Okay. 20% pullback in the stock market, and that causes the Fed to reverse course and abandon taper, abandon QE, and open the monetary spigots again, which will be rocket fuel for the commodities. Predictions are always dangerous, but that's a baseline expectation I have.
Okay, I'm going with that or aliens. So
Okay.
Let us know in the comments right there down below. What's your wild prediction for 2022? Thank you for listening to today's episode. Be sure to check out Silver Chartist right there down below.